And so here we have Wednesday's regular trading hours opening range gap and previous settlement time at 4:14. This makes Thursday's regular trading hours opening range gap. And then first percent to fair value gap is in here. This portion of price action, we're in this range, opening range gap, regular trading hours, opening range gap. And when we go into electronic trading hours, you're going to see what was pertinent, why I was shorting all right here. I did not anticipate the consequent encroachment of this gap because of something I'm going to show you when we get into electronic trading hours, okay? So I got a lot of questions sent to me in the comment section of the YouTube, and some of them were sent to me on X. How did I know? Why did I trust that it wasn't going to try to go up into this gap more and not even go back up to consequent encroachment? Okay, I'm going to teach that to you. All right, so now here's that regular trading hours, opening range gap, and the consequent encroachment of it. So at 9 o'clock in the morning, we ran up. What did we do? We took out these relative equal highs. So what's well, it's buy side. So if we take that out, and this forms a buy side liquidity pool raid, it's occurring on a octant level of the opening range gap, regular trading hours opening range gap. That's that white shaded area, and each one of these levels are your gradient levels, the quadrants and the octant levels. This is what I taught you this week. You want to find a purge on liquidity above relative equal highs or a single high. It's not just simply only relative equal highs, it's a single high too. Anything that runs liquidity and then starts to go the other direction, or if you suspect that's what's likely to pan out. Let me see here, make the candlesticks a little bit more prominent so it's easier for you guys to see. I know, I'm such a nice guy. Not even charging extra for it. Good old ICT. So we had this short-term little buy side liquidity pool. It runs up into it, okay? So when we have that, what we're looking for is a PD array that gives us a point of reference. So right before that liquidity is taken, if we can compare and contrast with other nested PD arrays, what do you see here? What is this candlestick right here? What's that? It's an order block. This candlestick right here is part of this overall run to this liquidity, that opening price. See anything there? What do you see? Runs to liquidity, order block. If this wasn't a run just to get here, dropping back down there, that would have been used to go long. This would have been a bullish fair value gap. But because we're part of an opinion I'm sharing as a hive mentality that I'm bearish. So watch me engage price action with what I've already told everybody. I'm not looking to go long. I want to focus on the setups that are going to present selling opportunities where the market will yield lower prices. I'm looking for those. It doesn't mean that it won't be an opportunity for me once in a while to get in here and do a intraday long, but I'm primarily giving you examples of just looking for the shorts because it's me sticking to a narrative. It's me sticking to a bias, what I believe is the underlying pinnings of the market right now. And sticking to that and not deviating and changing my mind all the time, which is what many of you are doing because of your infancy as a technical analyst. You're changing your mind a lot because you're being influenced by short-term price fluctuations, or you're being influenced by other people doing other things. Okay. And that's the problem when you watch other people do things with their money. You can't spend their money. You don't sleep with the losses when they take them. So why are you worried about what other people are making or losing? You're worried about all the wrong things. This is not a sport. It's not a spectator sport. You're here to learn how to do this in by yourself. But since it's a run just for liquidity, this order block cannot be part of a buying scenario. So what is it going to be? Mitigation block. Oh, we don't talk about that much. So this candlestick right here, it starts these two down close handles. This is the parent order block. Why? Because it's laying over top of an octant, or I'm sorry, the quadrant level, 0.25 of that white shaded area, which is the regular trading hours opening range gap. The orders that are significantly used to get you in and out of your demo trade. Remember, I'm now someone that's going to tell you get into live trades. I'm not licensed to do that. But when you're looking for those practice sessions, when you're trying to do demo entries, everything has to be anchored to these gradient levels. Otherwise, you're guessing. Once in a while, your order blocks, your fair value gaps might work for you. But the times that they work, until I started teaching it this year, you had no idea why that gap worked. This order block, where is it laying on top of? This gradient level. Here's a paradigm shift. Okay. Some of you are looking at this. So how can that be an order block? Because you said it has to be part and laying on top of a gradient level. Right. But look at the parent contingent relationship, the hierarchy. This is the parent order block. That candlestick is laying right on top of that. What is a propulsion block? A candlestick that trades down into the lower order block. This one need not be on a gradient level because its characteristic is borrowing the previous order block as discount sensitivity. This is perfectly traded down into that. I'm going somewhere in case you haven't picked up on what it is. I'm showing you what I did when I did what I did yesterday. There's your order block, change the state of delivery, that opening price. It opens up here and trades down right to it by a tick more below it, and then comes here. Next candlestick, we open, trade down into the order block again, and then rallies up. This is a valid propulsion block when it's bullish or buy side delivery going to buy side liquidity. This cannot go down to half of this range. It clearly didn't do that. The only thing it did was what? Use the opening on this candlestick right there, which is a change in the state of delivery. Long to get to buy side. This is a small little bread and butter scalp. It runs up to take that liquidity, but now watch. Borrow this fair value gap and then blend in the previous down close candle, which is an order block. It's a bullish propulsion block, but part of a run on this liquidity. So we anticipate this to be taken out on the downside. So we can borrow both of these ranges because they're nested. Two PD arrays with the proper context. Market structure is not the answer. That's not the secret. Okay? A lot of you 20-year-olds run around saying, Michael doesn't teach market structure. Michael doesn't know market structure. I don't need to look at any relationship between intermediate term, short term, and higher time frame, long term highs to smoke all of you. All I got to do is read the candlesticks just like this. I don't need to have anything small, anything bigger than what I have on my chart right here. That's all the candlesticks that I would need. And I could buy and sell both sides. Market structure is not the answer. Knowing what the order flow is going to be doing, not with looking inside the candles and looking at how many contracts were bought and sold. Notice we're not doing any of that here. Okay, everything is to open, high, low, and close, and it's time. It's time-based. What time is this? Look at the bottom of the chart. It's 9 o'clock in the morning. What is that part of? What's it part of? Macro time. So it's running to get that liquidity, going to macro time. The highest candlestick that runs that liquidity out is 4 minutes after 9. We drop down into this order block. If it was bullish, this would be enough to send it higher, but it's not bullish. We're looking for lower prices. Why? What's down here? Relative equal lows. Below relative equal lows, it's sell side liquidity. They took the buy side first. When it's bearish, this is exactly what you want to see. Buy side and then run for the sell side, then continue. Okay. Consolidation, fake bull flag. All we do is trade bull flags around here. We don't complicate everything. And then you're constipated. Runs right on through. And then we wait for price to do what? Here is the opening candle rate. Let me scrunch this up a little bit and widen it out. 9:30 candle right there. So we open there, which is why it's the low or the white bottom edge of that rectangle that's being shaded. That's why it's there. And then we trade all the way up to this same gap. Now, this gap would have been bullish if order flow was bullish and the narrative was bullish, but we're not. So this needs to become what? Inversion. So it becomes an inversion fair value gap, changing the state of delivery. It can trade there. And since it's going to trade there, it can trade just above the high of that inversion fair value gap. And that's why that one tick is afforded to do so, because it has to encapsulate a run that would be just above that opening price of that order block. That's now going to be a mitigation block. See what's happened there? It's changing its state. Just because you see a down close candle doesn't make it a bullish order block, and that's all there is to it. So we have relative equal highs here, and during the recording, you can watch it on my X feed. It was posted yesterday. I highlighted, just like I'm doing right here. I'm saying without having to talk, you know what I'm saying, without having any audio, because the video just has a song that I absolutely love. And that buy side liquidity, they run above it, and I'm shorting it. And then as we get approaching into this PD array, premium array, I want to sell short. I want to keep adding to it. I'm using the wicks in here. Every time it gives me an opportunity to trade at the consequent encroachment, I'm just close to it. I'm going to add one more. And I built a position of 4 micro contracts. And then you watch me manage that. These are the executions. It's going encroachment of that wick there. And it's on top of the upper quadrant. You see that? That blue line, watch the entry. Bang. Not random.